decode more about the Indian economy, we have Dr. Aurodeep Nandi from Nomura joining us. So, sir, firstly, to start off with, well, yes, auto sales have slowed down, discounts have started to rise. Are these signs showing that the Indian economy is slowing down?
So typically, passenger vehicle sales is a decently good indicator for discretionary consumer demand, right? It's the kind of consumer demand that you feel like buying. So you're buying something, not the sort of non-discretionary, you need a soap and a shampoo kind of demand. And so the fact that in July and then also in August, passenger vehicle sales have been contracting is a matter of concern. MHCV, medium heavy commercial vehicle, typically is an indicator of the level of activity, industrial activity in the country. The fact that it has also seen 2 consecutive months of contractionary sales, these are possible signs of some softening of the cyclical growth story.
And this is regarding auto, but when it comes to the overall consumption growth in India right now, what are your early readings suggesting? Are we seeing a pickup when it comes to the rural side, at least given the fact that monsoon has been good? How are you reading into that?
So one is that we are still waiting for data. The reason we are talking of auto is because the August numbers are sort of just coming up. For a lot of indicators, we still don't have the August readings. In fact, for industrial production, tomorrow we'll get the July readings. So we need some more data to figure out if this is something this is reflected across the broader set of consumption indicators. In terms of rural, yes, there are green shoots which are coming up there. We've had good monsoons. Sowing data has been pretty strong. The concern there is that the rural terms of trade overall remain low relative to historical standards. The other thing, of course, is sort of even within two-wheeler sales, which are doing, for instance, better. It's the higher end that is doing better than the entry-level models. So that's why we are saying that the growth signals are somewhat mixed. Now, of course, what has been missing in the growth narrative in the past quarter has been the public sector, the government. The election model code of conduct led slowdown in government spending, and some of that is transitory, right? So we hope that that kind of picks up in this quarter, which should again help with the cyclical growth.
Sure. And, it's interesting that the report talks about, of course, one of the positives being rural demand. Are you seeing that actually? Are we seeing a pickup in rural demand, or is that the expectation? And how much can it really alter the outlook for the sector as a whole?
So, as I said, the typical indicators for rural demand are things like two-wheeler sales, tractor sales, which have been doing decent. I think the thing that we also look at is the rural terms of trade, right? So, which is what farmers, or the non-farming community, what are they, the price that they're getting on their sales versus the cost that they're bearing in terms of inputs. And when you look at the rural terms of trade, yes, that is improving, but it's still lower than historical levels. So on the rural side, we are cautiously optimistic.
And what is the outlook then when it comes to the entire sector and the overall capex that you're expecting?
So I think in terms of capex, it is a mixed bag, in the sense that a lot of the key drivers of capex in India so far have been the government, which where you can see this in the budget numbers. There's been a big push in government sponsored capex, and the other one is the household sector, right? So people buying real estate. The part that isn't sort of yet in full steam is the corporate capex side. And yes, the latest data does show that FY24 has seen some improvement, but it's yet to be broad based. It's yet to pick up strongly to sort of create an upcycle. So I think if the government starts to increase its capital expenditure in the remaining few months of the fiscal, and that's going to be tough also to get so much money out of the door by that time, there should be the overall for capex growth, it should be fine. But I think the broader domestic demand is important to get corporate capex up and running strongly.
Sir, also, do you think that if auto slows down going forward much more than what it has been right now, then the domino effect would come in when it comes to the industrial or the manufacturing space overall, be it steel, be it aluminum?
So look, I mean, there are important forward and backward linkages with the auto sector, but obviously, the industries that you mentioned, steel, cement, they're not just dependent on auto. They are dependent on say construction, real estate. So it's not going to be a singular thing. I think what I would look at is the report that came out from FADA, which is their Federation of Auto Dealers, a couple of days back, where they said, look, our auto inventories have gone up from around 55 days in May to around 75 days. And so a lot of hope is being pinned onto the festive demand that the festive period that kind of kicks in the next 2-3 months. So I think from an auto sector perspective, the key thing to watch out for is how the festive demand this time is vis-a-vis last year, and whether we really see that improvement from the slump that we have currently.
And lastly, sir, before we let you go, I know you're an expert when it comes to the Indian economy, but what sense are you making when it comes to the Fed meeting, the dollar movement of late that we have seen, and also the global growth concerns that have been coming around?
I mean, on the Fed, our house call is a 25 basis point cut in the September meeting. And we have 325 basis point cuts this year, followed by sort of 4 next year. I mean, our base case is not 50 basis points. Now, in terms of growth slowdown, I think we need to differentiate between concerns of slowdown versus actual, hard measures of slowdown. So yes, the unemployment rate in the US has picked up, and the reason why I guess you're asking this question is because this has triggered something known as the SARM rule, which is that unemployment rate is picking up so strongly that this is typically a sign of recession. I don't think we are there yet. I think the US consumer is still strong. Yes, there are headwinds, so growth is expected to slow, but I don't think we are still at a point where growth is sort of falling off the cliff. But yes, and this circling back to India's growth story, if global growth does slow, that is an additional headwind for our growth too.
All right, appreciate your time. Thank you for giving us a view as to what the way ahead is, the outlook on rural recovery when it comes to the entire auto sector.
If you like this video, then like, share and subscribe to ET Now.